Hier ist die neue Folge der Ökonomie-Videos.
All right, let's jump right in. We're going to talk about crypto, but maybe not in the way you're used to. Let's forget about the charts, the hype, all that stuff, just for a minute. This whole explainer is really about one single powerful idea that holds up our entire financial world: trust. You see, to really get why something like Bitcoin even exists, you've got to start by asking yourself a really basic question. Now, seriously, take a second and think about that. Why do you actually believe that the number you see on your phone's banking app is real, that it has value, that you can get to it whenever you want? The answer to that question, well, that's the key to this whole story. You know, for most of us, trusting our money, the dollar, the euro, it feels almost automatic, like breathing. But it's not magic. It's actually built on this invisible foundation, a system that stands on what you could call three core pillars of trust. So let's break down what they are. So here they are. First, you trust your local bank, right? You trust them to hold your cash, process your payments, the day-to-day stuff. Then, you're trusting the big guys, the central banks, to keep the whole system stable, so your money is worth roughly the same tomorrow as it is today. And finally, you trust the system as a whole to give you some privacy, that your financial life isn't an open book. For many of us, this system feels totally solid. But here's the thing, that feeling of rock-solid trust, it's a bit of a bubble. It's not universal, not by a long shot. The second you zoom out and take a global view, you start to see that this foundation can get shaken, and sometimes it can crumble completely. So let's start with that first pillar, our trust in banks. What actually happens when the very institutions that are supposed to protect our money suddenly, well, fail? The fallout can be immediate, and it can be brutal. I mean, just think back to the 2008 financial crisis. When Lehman Brothers went under, that wasn't just a headline on the news. It meant real people who put their faith in the system saw their life savings just disappear, vanish into thin air. And this isn't just an American story. Fast forward to the Euro crisis. People in Greece literally woke up one morning and were told they could only take out 50 euros a day. 50 of their own money. Can you imagine that? That fundamental trust, that your money is yours, was just broken overnight. And then there was Cyprus, where savers learned another really tough lesson. That promise of deposit insurance, it turns out it had a very hard limit. If you had more than 100,000 euros in your account, it simply wasn't safe. So you can see why this string of events started to plant some serious seeds of doubt. And it was right in the middle of all this chaos, this wreckage of the old system, that this really radical idea started to gain ground. What if we could build a way to transact that didn't need these banks at all? What if we didn't have to depend on them? Okay, so let's move on to the second pillar, the stability of our money. We have this basic trust that the cash we save today will buy us roughly the same amount of stuff tomorrow. But history is filled with terrifying examples of that promise being broken. And when I say terrifying, I mean, just look at these numbers. We're not talking about a few percent a year here. In Hungary, after World War II, prices were doubling every 15 hours. In Zimbabwe, every single day. Just try to wrap your head around that. Your entire life savings turning into worthless paper, literally overnight. That is a complete and total collapse of trust. So from the crypto perspective, the cause of this is actually really simple. It's that governments and central banks have the power to just create more money whenever they want, just print it. And whether it's for a war or a bailout, that ability to just inflate the supply is seen as the original sin that always eventually leads to money losing its value. And so what's Bitcoin's solution? Well, it's not a person or a committee. It's just a number. 21 million. That's it. That's all there will ever be. It's fixed, it's predictable, and it's written in code. The goal here is to create a type of money that no central power can just devalue on a whim. And that leads us to our third and final pillar of trust, privacy. I think we all have a general expectation that what we do with our money is, our business. But that whole idea, well, it's being seriously challenged.
For centuries, cash has been the ultimate tool for privacy. But that freedom is shrinking fast. Just look at these limits popping up all over Europe. In Germany, you can't make a cash payment over 10,000 euros. In France, it's down to 1,000. In Greece, just 500. The ability to use cash anonymously is being regulated away bit by bit.
And sometimes it's not a slow creep, it's a sudden shock. Take India in 2016. The government just announced, basically overnight, that its two biggest banknotes were now worthless. Millions of people who stored their wealth in cash were suddenly forced to bring it all into the official, digital, and very trackable banking system. Now, of course, governments argue this is all necessary. It's to fight crime, stop terrorism, and those are serious points. But for others, this constant increase in financial surveillance feels like an unacceptable loss of privacy, and it's pushing them to search for an alternative.
Okay, so we've looked at how each of those three pillars of the traditional system can start to wobble and crack. Now, let's put it all together and see what Bitcoin's counterproposal really looks like. It's a totally different idea of where trust comes from.
And this slide really puts it all side by side. On the left, you've got the classical system. Your trust is placed in people and institutions, central bankers, your local bank, and so on. On the right, you have Bitcoin's model. It replaces every single one of those human trust points. Instead of trusting a central bank, you trust math, that fixed supply. Instead of a local bank, you trust a decentralized network of computers. And instead of an institution for privacy, you trust cryptography.
So when you peel back all the layers, the market speculation, the headlines, what is the core reason for crypto to exist, at least according to its advocates? It really boils down to three key functions.
It really comes down to this. First, it's meant to be an alternative to a banking system that you can't really opt out of. Second, it's designed to be protection against inflation, against your savings being quietly eroded away. And third, it's a tool for anonymity in a world where everything is increasingly tracked. Each one of those is a direct answer to a crack in one of those pillars of trust we talked about.
And so that brings us right back to where we started, with that one simple word, trust. The traditional system asks for your trust in people and in the institutions they run. The alternative, proposed by crypto, asks you to put your trust in mathematics and in open source code. It's a completely different way of looking at the world. And so the question this leaves us with is a big one. In the future, who or what will you choose to trust?